Okay. Good evening, everyone. So thank you so much for participating this session on this triple A paper. I think some of you may have known me. All right. I think some of you have actually joined for my SBR class. So congratulations for passing your paper, and now you are in this triple A paper. All right. Maybe some of you are actually first timers taking this paper. Can I know how many of you are first time taking this triple A paper? You can just type in the chat box. How many of you are first timers taking the paper? Okay. All right. Okay. Lovely. Lovely. Now, can I also know whether most of you are taking the March examination, or are you actually taking the June examination? Oh, Naim is here. Naim. Oh, Vivian. Ili. Hey, Ili. How are you, Ili? Oh, Eslin. Eslin also here. Where's Eslin? Eslin. Eslin, are you still at the tangga? Okay, lovely. I think most of you are taking the March examination. Yep, March. Okay, now, how am I going to divide this session is basically I'll allocate 1.5 hours, basically just for me to go through quickly on some of the important areas that you can focus on in regards to the AAA paper. And of course, I would definitely cover on the due diligence aspect. All right. But just in case, if let's say I do not meet you again, at least I actually left some important messages. All right. If you do not enroll for the next class, it is fine, but at least there are important things that you can take out of this session. Then after that, I'll also look into the due diligence aspect. So 1.5 hours, and then the next 30 minutes, what I'll do is I'll open for some Q&A session, because the thing about AAA, I would say that this AAA paper is more about, it's not so much of technicalities, right? Because audit is not that technical, as long as you have the right thought process of approaching every steps of the audit cycle, or every engagement that you are performing for your client. By having the right thought process, you should be able to tackle on the concern of the client, or in this case the examiner. Yeah. Now the important thing about AAA paper is this, which most of the time, if you try to memorize, if you try to memorize your answer for AAA paper, thinking that you have done it before in past year papers, or you have done it before in the revision kit, I would say that most of the time you are wrong, because the questions in AAA, they may look the same, but actually the concern, the thought process that is required by the question, most of the time they are not the same. So if you try to memorize your answer, if you try to come out with a template answer, if you are not agile enough in approaching the question, if you are not able to highlight on the concern of this scenario, if you do not elaborate well on why is it actually an issue, most of the time for this AAA paper, you would fail. All right. And this is where I think you can see that AAA paper has one of the lowest passing mark. Why? Basically because you don't want to think, you don't want to connect the dots, you do not put yourself in the position of a professional to highlight on the concern of the client, or to highlight on the concern of the issues in the scenario. All right. So please be careful with this AAA exam. So number one, what I'm trying to tell you here is, when you are going to approach the AAA process, you must be able to have the right thought process. So what are your thought process in approaching the cycle? Now, if you have the right thought process, trust me, you are going to become a good auditor. Normally, when I teach my students, it's not just for them to pass the paper, but to me, knowledge is something that knowledge is good, but it would only become powerful if you are able to apply it. And therefore, when I am delivering you the knowledge, I always believe that it is a knowledge that you can eventually apply in your real life, especially if you were to join the big four later on, or eventually if you are going to join the industry. All right. So thought process is very, very important for AAA. I'll show you later on how can you actually approach on this thought process. All right. Now, number two, how are you going to have the right thought process? Now, number two, second item that is important about this AAA paper, which most of the students actually take this paper for granted, is basically pertaining to the accounting standard. All right, whether you like it or not, you cannot become a good auditor if you do not know your accounting standard. Of course, when you are going to work later on in a firm, especially in the big fours, if you have any complicated issues, there is a specialized department whereby this specialist would actually advise you further on complicated standards. But however, before you are able to identify the issues, especially if you are going to look into your question one. Question one covers on audit risk, right? You would not be able to identify the audit risk in full if you do not know your accounting standard. And then again, you can also see in terms of your question two or question three, when you have your MTC question, matters to be considered question, again, you would not be able to approach on this particular question if you do not know your accounting standard. And without realizing, accounting standard would actually contribute maybe 40 to 50 marks of your paper. Of course, are they going to ask you in detail? No, but the issues are normally quite detailed. Meaning, if you try to always look at the surface, you may not able to solve, or you may not be able to identify the issues in that particular question. All right. So if you just thought that they are going to ask you on depreciation, you are wrong. Because again, they may actually ask you on the accounting policy of choosing such depreciation method, of choosing such useful life, accounting estimate of using such useful life. So if you are only focusing on the surface, again, you may not be able to identify on the issues, especially when recent examination questions, you can see that examiners no longer test you on the easy aspects, on the easy accounting standards, but they tend to focus more on complicated one. For example, IFRS 16 leases is quite common. IFRS 8 operating segment. If you have group issues, right? If you have group issues, they may also test you on what we call as the sustainable reporting. It has appeared. All right. They may also test you on IFRS 2 share-based payment. They may test you on group issues, change in group structures. Has it happened? All these have actually been tested. So don't take your accounting standards for granted. So you must have the right thought process. You must have known your accounting standard. And number three, of course, how are you going to elaborate on the answers? Elaborate or quality of answers. Elaboration of answers or your quality of answers. Can I ask any of you who have attempted the paper in December? Any of you have attempted the paper in December? Of course, you have failed. If not, you wouldn't be here. Any of you have attempted the paper in December? Naim, how much do you got for your paper? 46, right? Sophia, Afika, 47, Afika, 43. Now, if you fail at these marks of 45 and above, I would say that most of the time it is mainly because you have failed to give a good quality answer. If you fail below 45, basically because you have failed on item number one, that is to have the right thought process. All right. So this is where I am giving you the areas that you would be able to rectify within the next 1 month plus time. I think in the next 4 weeks that you have, right? This is where if you are a repeater, you may want to focus on these areas. All right. Now, before I look into due diligence, I would just want to also leave you an important message. Now, remember that I've told you just now, you must have the right thought process in approaching every audit assignment. How would you have the right thought process? This is where you would need to understand where is your position at that point in time when you are performing such engagement. All right. For example, first in question number 1 and question number 2, you would always know that the engagement that would be assigned to you would normally be the audit engagement, right? The assurance engagement that you would be performing in question 1 and question 2 would normally be the audit engagement. Now, in an audit engagement, it is important for you to identify, or it is important for you to know in which part of the audit cycle are you in, all right? Because every audit cycle would give you, remember what I'm telling you, every audit cycle would give you different set of information. Every audit cycle would give you different access towards the client, all right? Every audit cycle would also be giving you different uh, different depth of issues that you are identifying. For example, if you are at the preliminary stage of an audit cycle, all right, most of the time, of course, you are going to be starting from the perspective of you trying to tender for a client, all right? Or basically you performing an advertisement for you to win a client. So if you are in the stage of tendering of a client, or if you are performing advertising, look, there are two different issues here. Tendering for a client, always remember you may not have access to the client. What you are having here is basically just information that you are able to get within your reach, most probably on the website, most probably on the announcement made by the authorities, or for example in Malaysia you may look in terms of announcement made by Bursa, or when you are tendering for a client you may have access to the client but only during a briefing that were made by the client to all potential auditors who are tendering for the job. So what you can see when you are tendering for a client, it would involve a lot of assumptions. So in your tender document, you would be basing on this assumption. Therefore, from this assumption, you are trying to show your strength and you are trying to show on the capabilities of your firm. However, the strength, the capabilities are being made on the assumptions. Therefore, most of the time, your tender document can be quite generic. All right? It can be quite generic. But if you are going to perform an advertising for a client, for you to win your client, it is also therefore important for you to know what are the ethical issues, what are the guidelines that you would need to adhere in order for you to perform such advertising. So again, this is another area that you may want to look at. Of course, it has not been tested for quite some time. Now, once you have tendered for your client, what will be the next step? The next step here is basically when you are now being shortlisted and eventually you are now going to be appointed. So out of the auditors that have tendered for a particular job, you are now being shortlisted and eventually selected. But even though you are going to be selected as the auditor, it is important for you to first assess whether should you accept that appointment. Of course, you'll be saying, if I am going to accept this client in the first place, if I need to consider whether I'm going to accept this client, then why in the first place I tendered for the client? Now, like I said just now, when you are tendering for a client, you are only based on the information that is available within your reach. You may not know on the exact situation that the company is facing. Understand? Now, when you are going to be appointed, when the client have selected you, now you get access to the client. Now you may have gathered further information about the client. Now you will know exactly what the clients want. Now you will know exactly whether the client have any issues with the outgoing auditor, which therefore resulting them to be wanting to appoint you. You have now able to know how complicated is the engagement. You would now be able to know what is the actual planning of the client. So this is where you need to consider on your CAP, your client acceptance procedures. Yeah. So from the CAP, the difference with tendering is that you are now getting better access to the client. Right? Now, because you are getting better access to the client, you may need to consider your NET, the nature of the client, the extent of the resources, and also the timeline that is being allocated for this engagement, right? Your NET. Now, and also consider whether are you able to speak to the previous auditor, can you get a proper clearance of the resignation of the previous auditor, ensure that there are no ethical issues. If there are ethical issues, would you be able to apply a proper safeguard before you are able to accept on this client? If the safeguards are able to minimize your risk of that ethical issues, sorry, not risk, the right word are threats. If you are able to apply safeguards and reduce the threats to an acceptable level, then yes, why not you consider accepting the client? So eventually, if everything goes well, your CAP is okay, now accept the client. So if you are going to accept the client as part of your quality control, you must also ensure that there is a proper appointment that are being made to you. All right, there is a proper engagement letter that are being signed before you kick off the audit. That is a quality control. You need to ensure proper appointment is being done before you are able to accept on that particular engagement. Now, you have accepted the appointment, you have signed off, the client has also signed off the engagement letter, you have set the proper expectation of the client by highlighting to them what are our responsibilities, what are the management's responsibilities. Now, guys, can you tell me in an audit, what are the responsibilities of the client? What are the responsibilities of the management? Can you tell me? You can type in the chat box. What do you think are the responsibilities of the client? What are the responsibilities of the management? What are the responsibilities of the management and what are the responsibilities of our client basically in an audit? Naim, Azlin, good. Okay. The management is supposed to give access to all information. Yes. What else? Management prepares bookkeeping. I think Shaza, you want to amend the word. All right. You shouldn't say management prepares bookkeeping. You should say management is the one who are going to prepare the financial statement. All right. Prepare financial statement according to the standard. Okay. Nazira, yes, management is the one who is going to design and implement internal controls. Yes. Establish policies and procedures to prevent any non-compliance. Good. Internal control. Good. These are what we are highlighting in the engagement letter. All right. To set an expectation to the client by highlighting their roles and also their responsibilities. Now, once we have performed CAP, this is where the next step here, we try to prepare what would be our audit strategy and what would be our audit planning. All right. So this is the most crucial aspect in an audit. What would be your audit strategy? Audit strategy always focus on the bigger picture. Audit planning always focus on the specific planning, specific approach, detailed approach for that particular engagement. Now, tendering to CAP to audit strategy and audit planning is key for you to understand this, because this is where it would appear in question 1. So if you want to pass your paper, these first 3 areas of your audit paper is important because it contributes huge mark in your question 1. You would need to know if you are going to perform your audit planning, all right? If you are going to perform your audit planning, what do you need to have when you are going to perform your audit planning? I would normally say, what are the tools that you need to consider when you are going to perform the audit planning? Remember, at audit planning stage, you need to consider your materiality, you need to consider your analytical procedures, right? Yeah, analytical procedures. You need to apply these two in order for you to know what would be your audit risk or what would be your risk on material misstatement. Sometimes you may also be considered to work back ways, to work backwards, whereby you may actually want to assess what would be your business risk for the client eventually, so that you are able to, again, from the business risk, you are able to determine what would be your audit risk. This is important. This is where 20 to 30 marks of the question 1 are going to be touching on these areas. Okay, number 1. This is a strategy. For students who are going to take your June examination paper, this is where you need to look into these areas. All right. Then, once you have planned, once you have come up with your strategy, once you have come up with your audit planning, then only you see you are normally, if you are tendering, you are performing CAP, you are preparing the audit strategy, you are preparing the audit planning, you can see in the question 1, your role at that point in time would normally be at least the manager, all right? At least the manager, or sometimes you may also be assisting the manager by being the senior in charge for that particular engagement, all right? Once you have planned, you know what need to be done. You know what are the risk areas. You know what are the relevant assertions that need to be applied in that part, that need to be that need to be concerned in that particular engagement. Now, what do? Now you send your seniors, you send your audit associate to the field, to the client, for them to perform the field work. So for them to perform the field work, this is where normally you are going to basically look into the next step of the audit cycle, whereby you are now basically performing your audit procedures, or sometimes you are also can also be asked on gathering your audit evidence. Now, for your audit procedures and gathering audit evidence, this is very crucial, especially in terms of the quality of your answer. All right? There is a proper technique that need to be applied when you are going to answer your procedures and when you are going to answer your audit evidence. And this is where the examiner are a bit strict. How are you going to answer your procedures? All right, procedures always focus an action that you perform on the substance, an action that you perform on the source in order for you to confirm your assertions. There should always be three components when you are going to approach your audit procedures. There should be an action that you perform on the source in order for you to confirm on the assertions. Or if you are going to collect audit evidence, look in the scenario, if the question is just asking you on audit evidence, most of the time, you should not try to mention any actions, but it is just asking for the source of information in order for you to tackle, or in order for you to highlight on the assertions that you have determined just now. So there is no action, but they should just be focusing on the source to confirm on the assertions. Be careful, again, audit evidence, audit procedures would normally be tested again in your question 1 and also in your question 2. All right? So this is where you can see the importance of the audit cycle. Then basically, after you have performing the audit procedures, after you have performing collecting the audit evidence, most of the time, all these procedures, all this evidence, audit risk would be documented in the AWP, or what we would normally call as our audit working paper. Who would perform it? It would be performed by the associate. It will be performed by the seniors, where they are going to work based on the risk that we have identified at the planning stage. Now they go to the client, they request for all the necessary information, they gather for all the evidence, they document it down, they identify issues. At the end of the day, when it comes to audits, it always goes back to what has gone wrong in the financial statement, what could go wrong in the financial statement. Was it because of accounting standard issues, or was it because of poor internal control, which results into errors, which result into misstatements towards the financial statement? So once they've identified all these issues, these issues are documented, and eventually they are passed to whom? They are passed to the manager, whereby the manager now, this is where your question 2 comes in. If you look into question 2, the concern of the question 2 is always, the position in question 2 is always you acting as a manager, where you are reviewing the work of your audit team members. Now, you as the manager, you are performing review before you are going to communicate the issues that are highlighted by your audit team members to the TCWG, to the management, to the partner. All right. So what are you going to do most of the time? You are going to perform your review, right? Whereby in this review stage, you are trying to review on the issues that are highlighted by your audit team members before you are going to perform any communication, either to the TCWG, those charged with governance, either to the management, either to the partner, either to the relevant parties if there are going to be any no class and so forth. So you want to understand the issues. Then only you are able to communicate. And again, when you are at this review stage, you are also trying to analyze, you are also trying to perform a testing whether all the adjusting and non-adjusting events have been appropriately accounted for by the client. Yes, there is an element of IS 10 that you need to consider here. You would want to know whether all those adjusting event, non-adjusting event have actually been properly accounted in the financial statement, because most of the time the client don't actually bother looking into this. And you may also want to consider whether all the written representation from the client have actually been received, and you also want to perform on your going concern, all right? Your going concern review to assess whether should the company still be able to exist in the foreseeable future, because eventually, however, it may also affect the preparation of the financial statement if the company is no longer going concern. All right. This is where I always give you an example. If you look into AirAsia scenario recently, right, that is the most recent issue that we have seen, whereby EY have actually included in the financial statement of AirAsia. They have given an opinion saying that the financial statement is true and fair. However, they included one additional paragraph, that is what we call as the MURGC paragraph, material uncertainty relating to the going concern of the AirAsia. Can AirAsia exist in the next 1 year? Yes, they can, but beyond that 1 year, they are worried, because it seems that AirAsia would have issues with their cash flows. It seems that AirAsia would have issues in generating revenue, as they can't fly their plane internationally. Even domestically, they are flying, but at a very minimal rate. So how are they able to sustain on their business? All right. And worse is where you can see what's happening to AirAsia X, right? The long haul flights, long haul airlines, where basically their value of their shares now, it seems to have a value of as good as zero. All right. So this is what we would want to do before eventually we are going to come out with our audit opinion. All right. So again, question 2 would look in terms of these procedures, evidence, review, and also audit opinion. If you ask me personally, if your question 1 and question 2 are strong enough, you have the right thought process, you know your accounting standards well, you know on the how are you going to come out with a good quality of answer, by right, question 1 and question 2 would be sufficient for you to almost pass, or basically, if you are really good, by right, you should be able to pass by just doing your question 1 and question 2, right? And this is where you really need to tackle. Yeah, you really need to tackle on the approach for this question 1 and question 2. So now you can see question 1 and 2 always focus on the financial statement. Audits tend to focus more on the financial statement, unless they are going to test you on the quality control, unless they are going to test you on performance management, then the approach would be slightly different. Quality control, the thought process for quality control is basically this. If I am running a firm, how do I ensure quality can exist throughout the entire audit cycle, throughout the entire firm? So quality control are basically policies and procedures. If I am at the planning stage, how do I maintain my quality control? I give an example. This is where it is important for you to ensure that before you accept a client, engagement letter should be signed before accepting that particular client. That is an example. So quality control always focus on policies and procedures, right? And then of course, recent past year papers, you can also see that questions are highlighted, basically ongoing concern, right? They ask you specifically ongoing concern review. How do you actually perform a review or an assessment on the going concern status of the client? This is where, for your information, if you have seen on your PFI, right, on the PFI engagement, your going concern assessment is slightly related to the PFI, right, the prospective financial information. So what the thought process at that point in time is just focusing on the assumptions that the management actually use in order for them to prepare the PFI. So again, the thought process is different. In a going concern review, the concern is not so much of the financial statement, but the concern is more towards the assumptions that are being used in preparing the PFI, because you would want to know whether the client is able to exist in the foreseeable future. Therefore, how do you know? You ask the client to come out with a projected cash flow, with a forecasted results, which most of the time, what do you think the client would do? Would they overestimate it or would they underestimate it? Of course, most of the time, for them to be able to justify on their existence in the future, what they will want to do is they would perform an overestimation on the assumptions. So what is your thought process? Your thought process is basically questioning on the assumptions used by the client when they are preparing such PFI. All right. So PFI actually exists in your going concern review. So if you are asking, oh, what is PFI? What is PFI? There, your going concern review is a PFI. However, on a side note, sometimes you may also be required to perform a specific assignment just on a PFI. Maybe because the client is in the midst of applying loan. Because the client is applying loan, they are required by the banker maybe to come out with a 5-year projected cash flow or a business plan which includes a forecast results, which includes a projected cash flow. So for them to come out with the PFI, they would require to apply certain assumptions. And for them to put some sort of reliability on the assumptions, they hire you as the consultant, not as auditor. You may be their auditor, but at the same time, they may also ask you to perform an additional services to look into this prospective financial information to give a view on this PFI. All right. And when you are required to give a view on the PFI, can you tell me, guys, the report, the opinion that you're going to give on this PFI, would it be a positive assurance or would it be a negative assurance? If you are required to give a view on this PFI, what do you think? Would it be a positive assurance or would it be a negative assurance? You can type out in the chat box. Okay, it would definitely be a negative assurance. Can you tell me why would it be a negative assurance? Why are you giving a negative assurance then? Because it's uncertain. Can you define uncertain, Ili? Lack of evidence available. Can you elaborate further, Shazwani? Why lack of evidence available? Yes, because it is based on future results, whereby we can never be certain on the future results. There is no, you see, Shazwani, be careful. when you say lack of evidence, all right, this is where, like I said, quality of your answer is very important. You, if you were to use lack of evidence, it is not, is I wouldn't say it is exactly accurate. And this is one of the reasons why examiner may want to fail you off at 49. Be careful. It's not because lack of evidence, but instead we are going to say because there is no conclusive evidence. The evidence is more persuasive rather than conclusive. Understand? So be careful with the choice of words. All right. So if you are going to say uncertain, why uncertain? Elaborate more. Uncertain because it is based on a forecast. It is based on assumptions where there are no conclusive evidence could actually be used to justify that the event or that the assumptions are actually going to happen. And yes, Najiha is right. We do not actually perform extensive procedures. Do we perform TOC? No, we do not perform test of control. It is more on a substantive procedures that we are going to perform for this engagement. So due to this limited, right, procedures that are being performed, this is where we can only give a negative assurance. Negative doesn't mean it is bad. Negative basically, we are putting a negative word so that we can come out with a positive opinion. Negative plus negative to give a positive. Nothing has come to our attention to say that this financial forecast is not true and fair. Negative and negative to give a positive opinion to the client. So can you see, audit or assurance is very interesting. Why? Every engagement, every cycle, every step of the audit cycle, all you need to do, all you need to ensure is you need to have the right thought process. If you know how to think the right way, if you are able to get this solved, trust me, you will pass this paper at a very high marks. Because I've done it before. Student got 77. One of my students got 77 in the previous sitting, all right, by just attending 50 hours of session with me with no additional other classes, because in previous semester we had long hours IRC. Especially if you are a working adult, if you are doing this part-time, you will enjoy audit, because audit is basically something that you normally perform in your real life. You have seen the process. It's just the matter of having the right thought process. Okay. As an auditor, all right, as an auditor, what would you have? What would you do? What are you focusing on? In any audit engagement, your focus is basically just pertaining to the financial statement. Right? Your focus is only on the financial statement. Meaning, is there any misstatement? All right? Is there any error? Is there any fraud that actually result to the misstatement? All right? Are we given sufficient and appropriate evidence before we are able to give an opinion pertaining to the financial statement? Meaning your focus is just on what could go wrong, what can go wrong towards the financial statement. Are there poor internal control, whereby this poor internal control may result into errors, may result into fraud, may result into non-compliance, and at the end of the day, any issues pertaining to the financial statement, have they been accounted for appropriately in the financial statement? So can you see, in an audit, your focus is just on the financial statement. How is it going to be different than a due diligence? Now, in a due diligence, you are now focusing basically on this, what we would normally call as fact findings. Right? In due diligence, you are focusing basically on fact findings. Meaning, in a due diligence process, all right, in a due diligence process, most of the time, there would be an involvement of three parties. You would have your client, all right, you would have your client who have engaged you, the firm, basically to perform a due diligence on whom? To perform a due diligence on a target. All right, so this is the acquirer. The acquirer wishes to purchase this target. So what they do, they actually hire you as the consultant, as the due diligence consultant, performing due diligence pertaining to the target. Of course, you can also say that due diligence can also be performed internally by the client, right? But however, uh, I would say the benefits of having external parties, right, to perform due diligence is that external parties can give an independent review, right, an independent opinion. Yeah, external parties are more objective in assisting the client, right? Basically, before the client going to come in and acquire the target. So what you can see here, when we are being appointed, all right, when we are being appointed here, what we are trying to do is that we are trying to help the client to basically gather as much information pertaining to the target. We do not focus on financial statement. We do not just, I wouldn't say we do not focus, we do not just focus on the financial statement, all right? But instead, we focus on the business aspect. We perform fact findings basically to gather as many information, analyze those information so that we can feedback to our client, assist our client in their decision making. Do we make the decision for the client? No, we don't. But we actually elaborate on the issues that we identify pertaining to the target, so that these issues that we identify eventually can assist the client in making their decision. For example, if I as a firm, if I as a due diligence consultant, when I perform a due D pertaining to a target, okay, as auditor, if the target has a building, your concern would just be in the sense of whether has this building been recognized appropriately in accordance to IS 16? Have they depreciated the building? Did they perform fair value model? If yes, have they revalued the building in accordance to the requirement of IFRS 13? If yes, was it being revalued in accordance to level 1, level 2, or level 3 of the fair value hierarchy? So you can see, as auditor, your concern is more towards the accounting standard issues. Have they complied with the requirement of the IFRS? But if I am going to look from the perspective of a due diligence consultant, what am I looking at here? I am looking in terms of, okay, this target has a building. If my client were to acquire this target has a building. Would the purchase price that my client were to pay when they are going to acquire this target, would the purchase price include the acquisition of the building? If my client were to come in, acquire this target, would the building actually being included together with that particular transaction? If yes, then okay. If no, then what would be the valuation of this particular transaction? Because the valuation of a transaction would normally be based on the net asset of the target. This net asset is basically asset minus liability. Have the building been included as part of the net asset? If the building is not going to be part of the acquisition, then by right, this is something that would need to be separated out from the net asset. Hence, it is going to affect the valuation of the entity. I give an example. I've done before due diligence for 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 uh, for Geely when Geely purchased Proton previously when I was with PwC. You know, when Geely acquired Proton from DRB Highcom, Geely only agree. Geely and DRB Highcom only agree to include the Tanjung Malim plant in Perak as part of the transaction. The HQ that Proton has in Shah Alam, in Highcom, it is not part of the acquisition. Therefore, there are two issues here. The fact that the Shah Alam plant is not included, it therefore reduces the valuation of the transaction. It reduces the valuation of net asset. Hence, it affects the purchase price. And number two, the fact that the Shah Alam plant is not going to be included in the transaction, knowing that there are 4,000 to 5,000 employees whom are based in the Shah Alam plant, they would need actually being transferred to Tanjung Malim. So if Geely were to proceed with this transaction, you see, as a buyer would only want to know two things. One, what are the facts that eventually affect the valuation? Right? We are performing fact findings basically because we want to know to what extent does it actually affect the valuation of the transaction. Because my client, if they are going to acquire the target, my client would actually pay or put the valuation based on the net asset of the target. That is one way for them to value the target. If certain assets are not included, then it therefore affects the valuation. And we do not just look in terms of asset. Sometimes we may also look in terms of potential liabilities. Yes, you see, as an auditor, you would want to know whether all liabilities have been accounted for appropriately in accordance to the accounting standard. And that's it. You only limit on that. If the liability is virtually certain, virtually certain or probable, then it would be recognized. But if it is only possible, then you would just make a disclosure in accordance to the contingent liability of IAS 37. But as a consultant, all right, again, as a due diligence consultant, remember what I've said. We are concerned for our client whether is it worth it for them to pay such amount for them to acquire the target, and how are they going to pay, on what valuation. It will be based on the net asset. So of course, most of the time they would want to the target may try to actually uh, understate on their liabilities. So this is where we want to perform checking. But we do not just focus on liabilities that have already been recognized. We would also consider on potential liabilities. Potential liabilities, we assess on the likelihood, even though it is just being disclosed, but if we feel from a business perspective, it would eventually occur. Yeah, from the business perspective, if we feel that, yes, now you just disclose it, but high chances that eventually you have to pay for it, it is just a matter of time, then this is where we want to take note and we want to advise on these particular issues to our client, to the acquirer. Because again, if we feel that it is something that would eventually occur, then we can advise the client basically to take these issues as part of the consideration in valuing, in putting the valuation for the target. Or worst case scenario, we can also advise the client, okay, look, if you were to come in, this particular target here has a legal case. But of course, it is at a very preliminary stage. this particular client here are supposed to make a refund to their customers, which they have not made. There are potential refunds that they were supposed to make, assuming because they are a travel agency and now COVID comes in, it seems that high chances they are not able to fly for the next few years down the road. High chances these particular customers would definitely ask for a refund, even though they have not asked for the refunds yet, but high chances they are going to ask for the refunds. So these are some potential liabilities that you should consider. This is what we are trying to tell our client. Now, what should you do? So most of the time we can advise the client, maybe it should reduces the valuation, or number two, we can also advise the client, why not you sign an indemnity agreement, basically indemnifying you from such liabilities, meaning any potential liabilities that were to happen pertaining to these issues in the future, when eventually you are going to come in, you make sure you get yourself indemnified, meaning you as the new owner, you are not going to bear it. You're going to tell to all these potential creditors to approach the previous owner, get the previous owner to settle it. You can no longer approach us as the buyer. You see? So these are the added values that we are giving to our client here, all right, by performing fact finding, so that we can we can assist them in terms of the valuation that they are going to make. We can assist them to understand on any potential operational issues, right? Now, do we perform TOC in due diligence? We don't. But of course, we want to try and understand how does this target basically operates, so that eventually we can explain this to the client, so that the client knows when they are going to come in as the new owner, they are able to improvise. They are able to be prepared for any potential operational issues. I give you an example. Sometimes you can have a target whom are so relying on the owner. Now, if the client were to come in, now take over the business. When they are going to take over the business, they want to ensure that the business can still go on like how they are expecting it to be when they perform the DD. Now, if the target is relying so much on the owner, when the buyer comes in, the owner now exit the company, is there anyone who can replace the owner? Because if there is actually someone who can take over the owner, who have played a vital role in running the company, then yes, all right, then yes, it is okay. But if not, then it would be a potential issue that we want to highlight to our client. We want to highlight to them the fact that the business is relying so much on the client, on the owner. So would you actually consider hire the owner as part of the management, and maybe you should consider doing a proper transition, a proper training, so that the management of the company can be handed over eventually over certain phases or certain number of years. So operational issues. All right. So again, that is the purpose of us performing this fact finding. And we also want to perform fact finding because we want to verify the management's representation. Of course, most of the things that are going to be represented to us by the management are basically issues, right? They are basically the good news, the good stories. They would always tell you all the beautiful things that they have in the company. They would always tell you things that are in the surface. So this is where us as the DD consultant, what we would need to do here is that we would need to verify whether such information given, such representation given by this target to the client, are they actually true? Or are they actually just trying to overstate? Or are they just trying to give beautiful stories so that they are able to basically inflate on the valuation of of their company? So again, we want to verify such information. So all these are being done basically so that we can assist our client in performing their acquisition planning. Right? So all these issues, if you can see, we do not focus on the financial statement. We do not focus whether have they prepared the financial statement in accordance to the IFRS. No, but we try to look in terms of the business aspect, right? If my client were to acquire this target, what are the information that I want to find out of this target so that eventually it can assist them to plan the acquisition? Are there any operational issues? Are there any overstatement or understatement of asset and liabilities which therefore affect their valuation? Are there any overstatement and understatement of information being made by the management? To verify, we want to verify the management representation. So this is what we try to focus on in a due diligence. Due diligence are more fluid, right? They are not so rigid as an audit, because audit, you must comply the auditing standard, right? You must ensure that the financial statement is prepared in accordance to the accounting standard. How do you do that? You apply TOC, you apply substantive procedures to confirm that the financial statement is complying with the accounting standard before you give an opinion. But in due diligence, you have a wider perspective, putting your position of a potential acquirer who is going to acquire this business, trying to understand whether is it worthwhile. Of course, we don't give an opinion whether is it worthwhile or not, but we put that thought process so that we can fit all these necessary facts, necessary information, so that the client is able to make their decision. All right? Now, do you have any question pertaining to this DD before I add on a little bit more? All okay? Okay, huh? No question, huh? Lovely, huh? All right. Now, okay. Due diligence is very interesting, yeah. If you see the questions later on, all right, I think you can practice it. You should be able to improve there onwards. Audit is just about doing question, having the right thought process, do the question. You are ready for your exam. Audit is not difficult actually, right? If you know the right way to approach the paper. If not, if you just try to memorize, gone. You will never be able to know what are you actually doing in every assurance engagement. Now, one thing that I want to remind you, of course, you've seen the purpose of a due diligence. Now, putting your role as a consultant, if you are going to approach by your client to become a due diligence consultant, right? To become a due diligence consultant, right? Normally, the client here is also your audit client, right? Normally, the client that is going to approach you to perform due diligence, most of the time, they are also your audit client. Guys, can you see? Woohoo! Can you see this message? This actually shows that TYMBA has officially been approved as an ICAEW learning provider. Woohoo! Alhamdulillah. Okay. All right. Now, tak boleh fokus dah. Okay, now, so coming back here, yeah, okay, there is email directly from UK. All right, we are good to go as an ICW provider. Today we are waiting for the ICW results. Ooh, lovely, 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 lovely. Yeah, yeah, Cik Tim. Okay, okay, coming back here. Now, what I wanted to say just now. Okay, now coming back here. Now, if you are going to accept that particular engagement, right? If you are going to accept that particular engagement, what we would need to do is that, right? What we would need to do is that it always goes back, all right? If you are going to perform your acceptance, it always goes back to your NET, right? It always goes back to your NET. Nature of the engagement, right? Extent of the resources, and the timing of the audit. Always remember at the timing of the engagement. All right. So in any acceptance, use these guys, whether you are at PFI, whether you are performing DD, whether you are performing audit, before you're going to accept any client, always look back into this NET, the nature of the engagement, the extent of the resources, and also the timeline, the nature of the engagement. Do you have expertise to do it? All right. Do you have all the access to the information? The nature of the engagement, so that you understand what needs to be done. What is the purpose of the engagement? That's the nature. That's the purpose of the nature. Number two, extent of resources. Do you have all the necessary resources? All right. Do you have all the necessary resources? Do you have the expertise? All right. Do you have the knowledge? Do you have the specialists? Or should you actually hire any specialists? And what would be the timeline, right? All right. Is the timeline very pressuring? If it is very pressuring, can you actually finish it in that allocated of time? Or are you being pressured to complete it as soon as possible to an extent whereby it may jeopardize your engagement, to an extent whereby it may affect the quality? In any engagement, you would always consider this NET. But on top of that, you must always also consider on any potential ethical issues. All right? Remember, ethical issues, if you are going to be the auditor and eventually you are going to be the due diligence consultant, as an auditor and also as a due diligence consultant, would there be any threats? What do you guys think? If you are acting as an auditor and you are also eventually acting as the due diligence consultant, would there be any threats? There is going to be a self-review threat. All right. Now I wouldn't think so much of I wouldn't think there is an advocacy threat, so much of an advocacy threat, because advocacy threat is when you are perceived as promoting the client. In this case, you are not actually promoting the client, you are just performing a due diligence, understanding of whether is it worthwhile basically for the client to acquire this particular target. I would say it is more of a self-review threat. For this self-review threat, please, if you are going to ask on any ethical issues, do not just simply mention that, okay, there is a self-review threat. Why? Because we ended up reviewing our own work and giving an opinion. This is a very poor quality answer. When you are going to elaborate on your ethical issues, Vivian, when you are going to elaborate on your ethical issues, remember you have to be very specific, very detailed on that particular arrangement. For example, by performing due diligence, you are going to verify the net asset of the target. From the verification of the net asset, it would eventually going to be relied upon by the client in calculating goodwill, whereby later on, as an auditor, we are going to audit the financial statement. We are going to audit goodwill, which consists of net asset that we have verified. So can you see, you are elaborating in detail what are you actually performing when you say you are going to rely on your own work. You have to detail that out. Therefore, this is where we are going to rely on our own work. We may fail to criticize on our own work, which results into a self-review threat. Therefore, what would be the safeguards that we can apply here before we are going to accept such engagement? Can you tell me, guys, what are the safeguards that we can actually perform in regards to this particular engagement? What are the safeguards? If it's going to be a self-review threat, what are the safeguards that we are going to apply? Separate teams. Good. Two separate teams. Two separate teams. Two separate partners. Independent partner to review the quality of the engagement, right? The quality of the engagement, and perhaps two separate engagement letter. All right. So these are what you can consider before you are going to accept such engagement. Yeah. So this is where you are going to perform your acceptance procedures. Then eventually you perform your work. Normally they are going to ask you to basically explain from the issues. They are going to give you a case scenario. They are going to give you issues. And from that issues, you must be able to explain why is it an issue that you want, that results you to want investigate it further and highlighting it to the client. All right. So from that issues, you want to identify why is it an issue? Why is it important for us to highlight it to the client? Most of the time, it is going to be important to be highlighted to the client because of why? Because of it may affect their valuation, it may affect their operational when they take over, and when they are going to verify, and it may also affect the verification of the representation. Okay, so most of the time, the issues are going to come back to this particular line item. All right, so that's about it. And the next question would normally ask you, okay, what are the steps to be taken? All right, what are the steps to be taken in order for you to basically verify on these issues? So it is more of procedures, but it is not as strict as your audit procedures. It can be anything and everything. The steps, the additional steps that can be taken to basically verify on these particular issues. All right. So acceptance to identifying issues, two steps to be taken, and then eventually reviewing stage. All right. So I just give you the flow. It would be acceptance, eventually identifying the issues pertaining to the client. What are the issues? Why are they actually an issue? And therefore, what are the steps or what are the actions to be taken? And lastly, how are we going to report it back to the client? All right. So I want to highlight to you, most of the time, due diligence is a non-assurance engagement. All right? You never actually highlight to the client that you never actually highlight to the client that, look, you have to buy this. You never give an opinion whether should the client actually buy this or not. No, you never make decision for the client. What we would normally do is we report issues. And I wish to share with you, in a due diligence report, most of the time it would be consisting a lot of disclaimers, right? In a due diligence report, it would normally be consisting of a lot of disclaimers, because our concern is, if our client were to make decision based on our report, if anything goes wrong, they are going to blame us. That is something that we do not want to happen. All right? We would just give the facts, get them to understand such information, but we are going to indemnify ourselves, not indemnify, we are going to put a disclaimer basically telling them, look, we only give you information, we never ever suggest or make decision for you. At the end of the day, you make your own decision. So that's normally what we are going to perform. All right. So this is the complete due diligence process that we would normally have in an engagement. All right. Now, what I'm going to do, if you just quickly look into the one of the past year paper that I've sent to you, all right. If you look into the past year paper that I've sent to you, I think it is this December paper, but here it is a hybrid paper, September, December 2017. Now, one of the question that you can look at here is on this question 3. Can you see? All right. If you look into this first part, ready? Are you all ready? Yes, yeah? Okay, lovely. Okay, lovely, lovely. Now, Norashikin, are you my student? Majamil, Natasha. Okay, now, if you look into, that's what I thought. I see you everywhere. Nora Shikini, I think I see you on Twitter. I see you on Sunday class. Sunday class, kan? You are with me, right? Sunday class? Okay. Okay. Lovely, lovely, lovely. Okay, now, you see, if you look into the question, don't be afraid of due diligence question. Most of you always afraid, anything on non-assurance engagement, especially those who are taking much exam. You are always afraid. But actually, the question, the requirement is most of the time and something that you can anticipate. Right? It is most of the time something that you can actually anticipate. Remember what I've told you just now? They would normally ask you to identify what are the issues in the scenario, and from that issues, what are the additional actions to be taken. So if you look into this question carefully, what's the first concern? Explain why each matter requires further investigation. In this scenario, they have given you the issue, but what you want to do here is to elaborate more. Why is it actually an issue? Let me just hold on. Let me just share this to my iPad so that I can annotate it on my iPad. Lovely, 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 lovely. I'm so excited. I just can't hide it. I know, I know, I know, I know, I want you. Okay. Min Bakri, hope that you're going to take your exam. This sitting me Bakri. Okay. Now, so if you look here carefully, so if you look here carefully, can you see why each matter requires further investigation? Right? What are the issues? Why is it actually an issue? And what are the actions to be taken? Right? As simple as that. So how do you know whether is it an issue? At the end of the day, you can try to relate back with this item that I've mentioned to you just now. The valuation, does it going to affect the valuation of the company? Would it result into potential operational issues? Are the management trying to basically overstate, understate something that now we have verified it, but then it seems that whatever they have given to us are not basically true, or it is white lies, they are white lies, partial truth, right? So these are what we want to relate back, and therefore, what are the procedures that you are going to perform? And please, when it comes to procedures, please be clear. What is your objective? What are your actions? What are your objectives that you are trying to achieve? Quality of answer on these areas are very, very important. Because if not, this is where you can see, again, I want to highlight to you, you may actually fail at 49%, 48%. It is not luck, guys. 48, 49, it is not a matter of you asking them to review back your paper and you think that they are going to, increase your marks to 50. No, 48, 49, 50, 51, 52 are borderline papers, where borderline results where normally they are being reviewed at least twice to three times to thrice, whereby they would reconsider should they bring you up or should they pull you down. So quality of answers are very important. The choice of words are very important in AAA. So never take it for granted. Okay, so I believe you can go through the question on your own. You can give it an attempt, and you can also review your answer by looking into the answer scheme uploaded on the website. All right, so I think that's basically it that I want to cover with you. Now, what I'm going to do is that I'm going to open the floor for any questions. Feel free to ask any question, either pertaining to this due diligence or either pertaining to the audit. All right, I think I am more than happy to help you. All right. Okay. Ili is asking here how to differentiate due diligence and customer due diligence. Customer due diligence is basically something that you normally perform. In a nicer words, right? In a nicer words, the normal term that we normally use. Customer due diligence is what we call as your KYC. Know your client. Who is your client? Where are they actually getting the money from? Do they have any illegal activities? All right. Are they actually being funded by any illegal activities? Normally, in a customer due diligence, in any sort of engagement, normally we would perform our customer due diligence, because we would want to know who is this client, especially in DD. You see, yeah, in any engagement, we want to know who is our client, because basically we want to know their sources of income, their sources of funds, because we are concerned that they may actually be a part of money laundering activities, especially when it comes to due diligence. Due diligence is a wide scope, all right? Due diligence on customer is basically a subset of due diligence whereby you are trying to know who is your client. Before you accept any jobs from this client, you want to know who is your client. Most of the time, it is more towards to confirm that whether are they actually part of any money laundering activities. Okay, example, I always give an example of recent scenario like Shuib, Shuib Sepatu. Do you know on Shuib Sepatu kan? On one of the artists, Shuib, he received money from a party whereby who have actually purchased 4 of his franchise, paying everything in cash. He accepted the cash and he accepted this particular client without performing any CDD, without performing any customer due diligence, or what we call as the KYC. Now, truth to be told is that now after certain number of months, it was found out that actually this client that he accepted, they were actually part of the money laundering, whereby they are trying to perform integration of such illegal funds back to the economy. So this is where CDD is very, very important, especially when it comes to due diligence engagement for any acquisition of a potential target. Because sometimes these people, they are able to acquire companies basically as a method for them to launder money. Understand, Ili? So due diligence is basically a huge scope. Depends. Are you performing due diligence pertaining to a target? And normally, if we were to perform due diligence on a target, that's what we will call as the FDD, financial due diligence, right? If you want to know on the legal aspect, is there any concern on the legal aspect, that one we would not perform it, that one would normally perform by the lawyer, then that's what we would normally call as the legal due diligence. If you want to know if the client wants to know on the commercial aspect, the target market, the potential market that they can go in, maybe they would want to look in terms of commercial due diligence. So due diligence is a wide scope. What we perform is FDD. Before we accept the FDD engagement, we perform customer due diligence, which is part of a quality control, right? Which is part of a quality control. Clear? Any more question? Explain how to identify business risk. Business risk is always putting the cap of a business owner. That means you do not focus on so much on the financial statement. You need to focus on, if you are going to become the business owner, what would be the potential risks that would be available, right, in this particular operation of the client. For example, if the client were to operate in terms of luxury hotel, for example, if the client operates luxury hotel, what is the business risk that we can think of when the client operates a luxury hotel? We know that luxury hotel, they would only want customers who are basically rich customers. Therefore, there is an exposure, especially right now, when COVID-19 impacts the world. We know that they are now facing problem, especially when the economic recession is happening at the same time. So this is where the business risk this is where one of the business risks of a luxury hotel is that there is an exposure of economic recession, which therefore would affect on the operation of their business. So business risk you always think from the perspective of a business owner. So if the client operates in an international market, right? If the client operates in an international market, in an audit risk, what are we concerned? In an audit risk, we are concerned with the compliance towards the accounting standard, right? The compliance with accounting standard. Now, whether have they applied the right closing rate, have they applied the right exchange rate? So that is basically the concern for an audit risk. But from a business risk perspective, when a client operates internationally, what is your concern? If I were to operate internationally, I am concerned on the forex exposure, because any increase or decrease in the forex rate gives me a potential exposure in terms of cost. All right. If the exchange rate is unfavorable, it therefore affects my operating costs. Or if I operate if I operate internationally as a business owner, how do I actually ensure that communication can happen among these entities in the group that are operating internationally? How do I ensure the reporting of the financial statement are actually synchronized? Do we have a cloud system? All right. So if you can see, Shazwani, business risk ni, you always try to think from the perspective of a business owner. But I know most of the time, students are very weak in business risk. Why? Because you don't read much. The strategy for business risk, you can only think as a business, as a person who operates a business, if you do a lot of reading. So one of the way I would suggest is that you do a lot of reading on business news. From there, you would able try to get some ideas. All right. From there, you would be able to improve, Shazwani. Do more reading so that you can open up your mind on any business nature. Explain on engagement quality control review. That's where your QC lah. All right. Naeem, is a long thing to explain, but I could say that quality control would always go back to the 6 pillars. Go back to the 6 pillars. What are the 6 pillars that you need to have in a quality control? But all I can say in a quality control does not just exist in an audit cycle. It exists in towards the entire process of you running the firm. How do you make sure you maintain your quality throughout the entire process of you running a firm? This is what we call there must be a proper policies and procedures. For example, I've given you one example just now, engagement letter at the acceptance cycle. If I'm at the completion stage, right? If I'm at the completion stage, what would be the most important? What is some of the example of quality control? Documentation. One of the pillar is on documentation. So do I have a proper documentation? Has it been properly documented? Do we actually give training to our staff, ensuring that they perform proper documentation? And if you have performed documentation, how long do you need to keep it? Normally for a period of 5 to 7 years, because it is something that can be investigated again. It can be something that can be audited against your firm within that period of 5 to 7 years, especially when you have what do you call it as the AOB investigation. So that is part of the quality control. Quality control is a huge topic. All right. All you need to do is to go back to the 6 pillars, and you need to ensure how does these 6 pillars actually available in every cycle of the of the audit cycle for you to maintain this quality control. All right. You mentioned that due diligence is non-assurance services, but then in order to provide a fact finding, we are assisting the client in making the decision. Well, assurance is basically you assuring that the facts are true. In a due diligence, normally you never give an assurance that whatever that the client, whatever the target represent to us is actually true or fair. You never give an opinion. The reason why we call it as a non-assurance services, because most of the time in a due diligence report, we do not give an opinion. Nazira, yes, we do a fact finding, but we never actually gives an opinion that the fact here is actually true and fair, or we never say that nothing has come to our attention saying that the facts here is not true and fair. We never give an opinion. We only get the facts, we put it on the report, we feed to the client make the decision. Okay, Nazira? So, but of course, sometimes the client may want us to do more, then yes, we can always do more. That's why the word that I use just now is most of the time, non-assurance, due diligence is a non-assurance engagement. But however, to a certain extent, depends on the nature of the engagement. To what extent does the client want us to perform such arrangement? If we can actually eventually come out with certain opinion, but I think the opinion at that point in time depends on whether the target would actually want to give us the access to the information. If we have access to the information, again, it depends on to what extent do we perform our testing? Do we perform rigorous testing? Do we perform tests of control? Because if not, maybe most of the time, our opinion would just be a limited opinion or limited assurance. Okay, Nazira? So this is where you have to be careful. There is scenario where firm A being appointed as auditor for FY 2019. However, end of the audit, client was not satisfied with the quality of audit and suggested adjustment. And suggested what? What do you mean by suggested adjustment? Adjustment would come from the auditor. Right? Hence, request to appoint firm B to redo. Okay, that means the right word here is that not that they suggested an adjustment, they suggested perhaps for the outgoing auditor or for firm A to change their opinion. Maybe that's what you're referring to, right? Hence, requesting firm B to perform the audit for 2019. What is the impact and consequences to firm B to the previous auditor, firm A? What is the impact and consequences to firm B to the previous auditor, firm A? First, you need to look at, are you firm A or are you firm B? Right? If you are firm B, right? If you are firm B, this goes back to your CAP. Remember, in your CAP, you perform your NET, you consider ethics, you consider whether are you allowed to communicate to the previous auditor. All right? You must give the benefit of doubt to both parties. Client would always tell you, firm A is nonsense, I'm not happy, they are not good, they are not competent. They will always tell their side of the stories. But remember, as an auditor, you remain objective. You can listen, but you never buy, because you listen to comfort them. At the end of the day, this is business. You want their money, you see, but you never believe them. How do you decide? Further investigation. How do you further investigate? You try to understand what is the issue. You try to get their permission for you to communicate with the outgoing auditor. Assuming that they do not allow you to communicate with the outgoing auditor, Most of the time, you decline the engagement. Okay? Most of the time, you decline the engagement if they don't allow you to access the previous auditor. However, if let's say they allow you to communicate with the previous auditor, you go and meet the previous auditor. However, when you want to meet the previous auditor emo, the previous auditor merajuk, the previous auditor don't want to talk to you. Now, what do you need to do? This is where, again, you go back to the client, you try to get all the necessary information pertaining to the issues that resulted to the disagreement. And you make a decision whether those disagreements are actually valid or not. You make a decision, you assess whether is it firm B right or is it wrong? What are the risks? If there are going to be threats, can you actually mitigate it to an acceptable level? Right? Or is it firm B that is right? If firm B is right, now can you still accept this client? Depending on how intimidating the client is. If firm B is right, now you would know that the client is actually intimidating. You cast doubt on the integrity of the management. You do not want to rely on written representation. You do not want to rely so much on internal control. You want to perform more substantive procedures. So if that were to happen, it affects the actions to be taken moving forward when you are going to perform the audit. But if, let's say, you are allowed to be to communicate to the previous auditor, now what do you want to do? Again, the point here is that you always want to understand issues. Would the issues be acceptable by you? Would you be able to perform the necessary actions to be taken before you are going to accept on this particular client? So the final answer depends on what are the actual issues in the scenario. But at the end of the day, my answer to you is my most important message to you is that don't straight away decline that particular engagement unless you are not allowed to communicate to the previous auditor, because at the end of the day, you have to be practical. As an audit firm, you are basically running a business. So by simply stating to audit, to decline a client is something that is quite impractical, quite impractical, unless if you are going to see that there is a very high threats that you are not able to reduce or mitigate to an acceptable level, then yes, you do not accept. Okay, Laili. So there are a lot of different scenarios here. Depends on what is the actual scenario. That's why I say, when you look into past year papers, you always think that, oh, I've done it before. But if you look into all the different possibilities, actually, the question may sound the same, may look the same, but they are not the same. Okay? All right. Anything else? Okay. Now, if there are no more questions, you see, my important message to you, which I've given to you at the start of the class, is that audit is very exciting. If you ask me, I love this paper, right? I love this paper. And I remember when I took this paper back then, while I was working with EY, I remember that I did not actually study for the paper, basically because I love the standard. And at that point in time, I was an auditor. All right. So what I'm trying to say is that it's all about being practical. If your answer is to follow on points that are given by the book, you do not apply critical thinking, you are not being practical in your answer, I would say most of the time you're going to fail. Right? It's about managing your thought process and how are you going to write quality answer. And the key is to have a good foundation on the subject matter and to do a lot of practice. There's no shortcut. That is all what you need to know about audit. I don't believe in giving proper setup. I don't believe in having a proper in a proper not proper. I don't believe in giving a one standard template structure or template answer for you to approach AAA, because AAA is not as structured as SBR. SBR also is not that structured anymore, especially when you look question 3 or question 4. But of course, question 1 and question 2 are quite structured. It follows the IFRS. But AAA is not so much of being structured, right? But it is something that focus on you giving a practical answer, of course, following the guidance of the ISA and also the IFRS. So if you are going to take the paper, all right, I would suggest that try to do a lot of questions, and the best is to do at least 5 years of questions from January to December. Do it 5 years, and I think for every 4 sitting, for every 4 sitting over that 5 years period, it is more than sufficient for you to pass the paper. Of course, do it in an exam condition. Don't lie to yourself. You do it halfway and then eventually you give up and you just highlight the answer. You will fail. Triple A is not as easy as other papers for you to pass. Not just triple A, like any optional papers, right? Any optional papers. I think compulsory paper are much easier for you to pass, but optional papers are always a bit more challenging. If June exam is CBE, how much is the difference to tackle the question compared? The question is the same, Laili. The question that you have been taking, other parts of the world have already started CBE. Only Malaysia started a bit late, you see. Right? Any parts of the world, most parts of the world have already started their CBE. So the questions are the same. Computer-based, paper-based, the questions are the same. Even previously, I think students can already opt for computer-based. It's just a matter of you practicing, getting yourself familiar. How are you going to answer on the screen? All right. So I've looked into the platform. The platform for AAA and SBR is quite straightforward. It's just a normal, some sort of a Microsoft Word presentation, and it's just matter of you splitting the screen. And how are you going to? The difference here right now is if you are doing a paper-based slightly, you can always highlight on the paper and you can always scribble on the paper. But now, how are you going to highlight it on the screen using the tools given to you? And how are you therefore going to extract important information by writing on that piece of paper? So your planning would be slightly different. I believe that is one thing that you may have to get yourself familiar. One additional challenge that you would need to consider. Okay, Riley? So question quality is the same, but it's just practicing on computer. That's about it. Especially if you are coming from the degree pathway, I believe most of you are paper-based students, right? So how are you going to overcome that? But it is just a matter of time. Practice makes perfect. That's about it. Okay, any more question? Now, I think what you can do, if you are interested to sign up for our AAA revision class, I think we have our spring class. Spring class is basically the revision class, especially students who are taking for the March exam. Please wait for our email. I think I believe there are some special offers that we are giving to you in that email. If you are taking any March examination, any June examination, we are happy to share with you on our full class. Full class are basically master and sprint. Master is basically 60-hour session with 2 mock exam and 2 debrief session plus sprint. Sprint is our revision class. Only for AAA and SBR, I am giving 32 hours. Sometimes I give 39 hours. Sometimes I give 40 hours. It depends on how exciting the students are. All right, but I'll try to give more as long as if I think any important areas that we can help you out. But minimum we would have 32 hours. All right, so that is a full class. But if let's say you have any financial issues, but you have good results, CGPA above 3.2, you have passed your if you come from degree, you have a CGPA of above 3.2, and if you come from this, the ACCA CAT pathway, you have passed your F papers first attempt, you are always welcome to apply for our TYMBA program, where we subsidize 50% of your papers for the exam. Practice will be using CBE for master and full-time. Actually, the CBE platform, you can always access it on your My ACCA, all right? So My ACCA allows you to practice on the platform. We try to do our mock exam on the platform, but there's a challenge to it. The challenge is that if you were to do it on the platform, some students said that you are not able to save it. Even if you are going to be able to save it, it will be in a PDF format. So the problem is the system is not so stable, but we do get access to the platform also. You also get access to the platform. So depending on what are the updates that ACCA are giving to us, but minimal, what we would say is that you would actually do it minimal on Microsoft Word, right? Nazira, but if you want to practice it on the platform, actually you can just refer to your My ACCA portal. It is already given to you. You can also do your practice there. We try to arrange if we are able to do the practice there, because the concern is you may do it, but if you cannot save your answer, then there is a problem for us. All right? I think a lot of people just complain about the platform. Yeah. But hopefully they'll just improve lah. All right? Matter of time. Matter of time. Okay, guys. So I think that's about it. Thank you very much. If you have any issues, you can feel free to WhatsApp us at 019229951, 019229951, or you can also contact Imran 012-981-7003, 012-981-77003. All right. So I wish you guys all the best. All right. If I'm going to see you again, I'll see you again either during the sprint or masterclass. Other than that, how would you say SBR will be more difficult for CBE compared to paper-based? It's the same issue, Vivian. SBR is not a calculation paper, right? So how is it more difficult? It's just the matter of you practicing on the computer. Same like AAA. The question is the same, Vivian. The question is the same. And SBR is not a calculation paper. Even if you're going to calculate, maybe it's just 5% to 10%. Just calculate in on the paper base, on a piece of paper, and just type it out. No issue. Right? The question is the same. All this while, the question is the same. Either computer, paper is the same. But the challenge is, how are you going to practice it on the computer? You know, how are you going to get yourself familiar on that? I've seen ICW students been doing that. As a start, it's not easy. So if you can take your March exam, I would suggest you to take the March exam, especially if you come from the degree pathway. If you come from the F paper, fine. Take the computer base. I think you are familiar with the computer base. But if you come from the degree pathway, no, I would suggest you to take the paper base in March, if let's say this is your final paper. Okay? Okay, lovely. All right, guys, thanks a lot. Okay, lovely. Take care. See you guys at the top. All right, bye-bye.